First thing that you have to do is you have to open up Bonita Bubbles. You probably have already done that. I clicked on the wrong thing. So we have to open or restore an existing company. Oh, I just clicked on the wrong thing again. Did you get an alert about tax season?
Yes.
Mark is done. If you clicked on remind me again, that means you're going to get a reminder again instead of saying, all right, I know about tax season. First thing you have to do is under company, make sure under company information you go through after Bonita Bubbles, get your name on there, please. This just makes sure all your reports automatically has your name printed on it. Now, when we look at Bonita Bubbles, it's very similar to the last two businesses that we have because we have our areas divided into three. On the very top, we have our vendors, then we have our customers, and we have our employees. On the right-hand side, it is divided into two sections. We have our company, and then we also have our banking. A couple things that I'd like to point out I haven't spent a lot of time on, but because of where we're at today, I would like to show this to you. If you wanted to see all of the accounts that we are using here for Bonita Bubbles, all you would need to do is on the right-hand side under Company, if you double-clicked on Chart of Accounts, here's going to give you your quick list of accounts, and it's going to give you your balances of those accounts as well. You can see when we look at QuickBooks, we have a 4-digit account number system. That's pretty standard set up in QuickBooks because even though we may have a smaller business, it is by default just going to go with a 4-digit number instead of the 3-digit numbers that we are used to seeing. You can see cash still has the number of 1,110, so instead of just being 110, we're just adding a 0 to the end of it. You can see that when we take a look at the name here and then it gives us the type, you will see that cash, it does not say asset, it says bank. Because it'll go through, if you had your QuickBooks set up, you could actually sync it with your actual bank account with your balance, and it would go through and automatically tell you when things are cleared, which is why I have it set up there, which really does automate the whole system for businesses. And then you'll also have petty cash, and petty cash here they have set up as bank. And then they have accounts receivable, other current assets, accounts payable, equity. Instead of saying owner's equity, they have it listed as equity, and then they have your income and your expenses. You will notice for our equity account for drawing, it has a negative number. Why would it have a negative number? Owner's equity has what for normal balance?
Credit.
Credit. Drawing has what for normal balance? A debit. Okay. So the purpose of drawing is to take away from our equity account, so therefore that is why drawing here has it listed as a negative balance, because equity has a credit balance and drawing would have a debit balance, which would make it a negative, which gets a little confusing because when we post things in our ledgers, we never have a negative balance, we either have debit or credit. But when we look at this column here, it's not broken into debit and credit, it just says balance. So when we see a negative number for our equity, that tells us that we have a debit balance for equity account, which then would therefore be debit, okay, or negative. So they're listed here for you to see. So at any given point, you could always go there to find it. What we need to do here is we have to journalize our adjusting entries for April 30th. Here, I'm actually going to have us go back to April 30th. I got to think. No, we'll just go back to the last year. I was going to see if we had to go back to a specific year, but I think it'll work just to go back to April of last year. So to do that, we're going to go under Company, and we're going to go under our Make Journal Entries. Now, it tells you automatically assign numbers to the journal entries. That is fine. So we are going to make sure that we leave this check mark on here for our adjusting entries. Now, we have to go back and we have to go to April. Is it going to give us an error message? Is it going to be more than 90 days in the past? Yes, it will. So we have to go to April 30th of 2012, and we have to go through and actually journalize our adjusting entries. To do that, we need to look on the very front of our packet. You will see our two accounts that we are adjusting are going to be supplies inventory and prepaid insurance. Our trial balance for supplies It gives us a balance of 855. Our inventory is 220, so what is going to be the amount of my adjustment? And how did you calculate that? Subtracted. Do not put in for your adjustment 220. That would be incorrect. So what we have to do is we have to go through and journalize our two accounts. So we're going to do supplies expense, and that is going to be debited $435, did you say? $635, yep. 35. And in our memo, we're going to put in adjusting entry. And then we will do the same thing to supplies. And that is going to be your first entry. Then we can go ahead and do save and new. We only have one more transaction to do, so we can go ahead and just say yes. Okay, now look at the date. What did it do for the date for this one? Stayed the same because the company profile is set to keep the same date. So our next adjusting entry, we have prepaid insurance has a balance of $1,100, and on the trial balance. And then, so we have 1,100, and we have to subtract from there 800. So our value of our adjustment should be 300. So we'll do prepaid, we'll do insurance expense for 300. Our memo is going to be adjusting entry. And then we'll do prepaid insurance is going to be credited. Same date, April 30th of 2012. And you can go ahead and click on Save and Close. It says 90 days in the past. Yes. That is it. Your adjusting entries are journalized. They are already posted too. Okay. So, the other thing that happens by using QuickBooks is I can now go in and print every single financial report that we had to do by hand. They're done for us. So, the first thing that we did is a worksheet. And we do a worksheet to make sure that everything, our debits and credits equal. But QuickBooks won't let us do it unless debits and credits equals. Did you find that out? It won't let you put an entry in unless your debits and credits equal. You have two accounts that are being affected. So we don't have to do a worksheet. What we have to do is we have to do an income statement and we have to do a balance sheet. And then we will be good to go. So an income statement in QuickBooks, because a lot of non-accountant people don't really get what an income statement is, but they would talk in terms of profit and loss. So what we are going to have to do is we're going to have to go through and print a profit and loss report. So to do that, we're going to go under our reports menu. And we're going to choose company financial, which is the very first report option. And then you can see that we have profit and loss. There are lots of them listed here. We have standard, detail, YTD. What does that stand for? Year to date. So if you are using QuickBooks and you wanted to find out how you're doing so far this year, you can just click on that and would really tell you for your fiscal period, from the start of your fiscal period to right now, where are you at for making money. And you don't have to do a lot of closing of books. It'll automatically generate where you're at, which is a very nice one. You also have profit and loss where you can compare this year to last year. It'll automatically do that for you, give you a report where you can compare the two. You also have by job or by class. Some businesses will actually go through and say, for example, if my business was landscaping, and Amber hired me to landscape her house, I would set up Amber's landscaping project as a job. And let's say that Ashley also hired me to landscape her house, and I would set hers up as a job. I could go through and compare those two jobs and see what my income was, how much money I made on Amber's and compared to how much money I made on Ashley's. And then I can make different recommendations about projects and what I would do to increase my net income, because that is what a business wants to do. We want to make more money. So one of the things that QuickBooks does is it allows, at the click of your fingertips, access to some reports for you to make decisions right away, instead of you having to go through and manually create all of them. So it is a big time saver. Okay. With the one that we are going to do for today is going to be the standard one. So if you go ahead and click on that. Now, by default, nothing's really going to come up there. Why? Date. Okay. So we want to do April 1st of 2012 to April 30th, 2005. Now, I hope this will work. If not, we might have to go back and change something. No, sorry, 12. Okay. Now, this is where we have to watch out. Notice what happened to our income statement. It's a negative. Why? Do we have any income? No. What happens is we opened a company file and there was some transactions already recorded in them. Okay? We put our expenses in 2012 because that was the last year. But where was our income put in? I think it was 2005. So right up here on the top, I'm actually going to go through and just change 2012 to 05 and hit refresh. And notice the difference. No, I just changed. I put from April 1st, 2005 to April 30th, 2012. Now, that is more than one fiscal year, which is why I wanted to show you. Because what year did we put our adjusting entry in? 2012. Was there any income in 2012? What year did they have income? 05. So what we should do is we need to go into our adjusting entries and change it from the year 12 to the year 5. So I'm going to show you how to do that. You can go ahead and leave this report up. And you can go under company and your journal entries and go previous. And right here up on the date, all you have to do is highlight 12 and type in 05. And I'm going to click on Save and Close. And it's going to tell you, you have changed the transaction. Do you want to record your changes? And you're going to say yes. Yes. But I have to do one at a time. I didn't want to do Save and New. Ah, okay. That would be another way to do it. Excellent. And then on the other transaction, I'm going to change the year to 05. Save and close. Yes, and it's going to give this the 90 days. Now, what I want to do, I still have that report up, correct? Now, change the end date from 12 to 05 and hit refresh. It's the same. A little bit changed. Let me show you the difference. With 12, look at the date column. Right here. It's telling me it's going April of 05 to April 12. And when you changed it just to 05, the heading on the top changed also, correct? Yeah. To only be April of 05. Okay. Did our amount of net income change? No. As a company, we need to get everything recorded in the fiscal period that it happened in, which gets a little bit tricky when we take a look at using some of these QuickBooks files because they have some of those journal entries already pre-built in for us, so we have to watch the year. Previous ones, it didn't really matter because we were just journalizing and there was a starting balance, but when we get into some of these where we have to report it for a fiscal period, we have to go by the year that's going to be listed on there. So that's a heads up to you. So here we have our profit and loss statement. What do we have to do to our statement? we have to go in and modify our report. When you modify your report, you want to go to your header and footer, extra footer line. You're going to type in your name and then the problem number, which is 65. I wish I was 6'5". And then, should you print this?
Probably.
Yes. What printer?
Probably the one that's not colored.
The 413, not the color one. Okay, so you can go ahead and print that. We do have to print one more thing. Sit down. I'll show you how to do it. What else do we have to print?
The journal entry.
We have to print our journal entries. So where are we going to do that? You forgot. You're going to go under Reports, Accountant, and Taxes, and you're going to go to Journal. Now, you have to change your date. Now, instead of clicking on the calendar, you can go ahead and type it in. You can type in 4/1/2005. And then you can go to 4/30/2005 and hit refresh. Notice when we do 4/1 to 4/30, there's a lot of transactions that are already there, but how can you tell which ones are yours? Look at the check mark column. Look at this heading right here. This heading where there's a check mark says adjustment. These right here is what established the company file for us to use. So do I really need to see the beginning ones? Do you need to print those for me to grade? The only ones that you actually did are going to be the ones on the 30th. I wanted you to see this so you can see the difference between when we have that check mark marked, what it looks like on your journal report versus off. So let's go ahead and change the report date from 4/1 to 4/30. And then refresh. And then you should only have your 2 entries there. I would like you to, you can go ahead and shrink up the name column. Because there's nothing in there. And then you can go ahead and print that report. So you should have 2 reports for this problem. Oh, sorry. Switch your headers. Add your header and footer to it. Modify report, header, footer, put in your name. 6/5. Okay. And then you can print that, staple those 2 together, and that is your project for today. Good job.